Here with Kodaah Hansen, Lighthouse Lending. Welcome in.
Thank you.
It's a pleasure to have you. Now, you help move the loan process along.
I do.
And tell us a little bit about how you got in the industry, and then more details on what it is that you do.
So I'm a mortgage broker. I actually landed in this industry kind of just by happen chance. I grew up doing gymnastics. I love it. I went to college for psychology and decided that I had absolutely no interest in doing anything in that kind of field.
So you can do a backflip and then tell people why they're afraid to do it?
Exactly.
All right.
I can teach you how, and I can also work you through the mental blocks.
Okay.
So,
all right.
But yeah, I mean, that's kind of my passion. I still do it. I coach almost every day after work, Monday through Thursday at this point, kind of. And then Fridays, we have like an open gym kind of thing. But yeah, I was doing that, and then COVID happened, which I think that kind of made a lot of people reevaluate what they were doing.
Yeah, for sure.
And so because of COVID, I kind of got stuck doing some landscaping work. I actually just happened to be able to work for one of the parents of the kids that I coached. He owned his own landscaping company. And at that same time, I was kind of connected through my former girlfriend to her dad's financial advisor. He is on the board of the charity Goodwill Foundations. He was actually one of the co-creators of the Habitat Restores, or at least for the Eastern Seaboard. And so my financial advisor had helped them put together their financial model and their financial plans for that sector, and had connected me with him. And originally it just kind of like handed me to him and was like, I want you to, help this kid buy a gymnastics gym. That's what he wants to do. He wants to like own his own gym and grow his own gymnasts. And so I want you to like teach him how to do that. And he was like, okay.
Nice connection.
Yeah. It was a really nice connection. And, I'm not with her anymore, but that connection has stemmed further than I ever expected it to go. But we had about 2 conversations. And after those 2 conversations, he was like, he really just kind of underestimated your value, didn't he? Which was, I guess, kind of like my first indication that, I could do more than just coach. And I've always, like I said, loved gymnastics. I've always wanted to make sure that that would be my end goal. But I have had a lot of other visions that I would like to see come to fulfillment.
Yeah.
I want to own multiple types of businesses, restaurants, and, I would like to own my own gymnastics gym. I want to open a pet sanctuary specifically for pit bulls, like rehab them and teach them like service animal skills, and then like re-adopt them out, give them a forever home kind of situation.
Yeah.
I also want to open a tiny home community for college students, which is something I'm actually kind of in the process of working out with the city of Raleigh. I've kind of been talking to NC State as well as Wake Tech and their housing department to kind of figure out what that would look like. And essentially, students would come in, they would buy a tiny home, just the home itself, from the school. The school would own the land that the tiny home is fixed to, and they would essentially mortgage the cost of the tiny home from the college for the time that they're, in school. And then their last semester, they would sell that tiny home back to the college and reap some of the benefit of the equity, as well as teach them the entire mortgage process.
That's a cool concept.
Thank you.
Yeah.
But yeah, I mean,
a lot of different dreams and visions and goals, though.
Yeah, I'm multifaceted, definitely. And I see myself doing all of these things. But mortgage has kind of been my track to success. It put me in a position to make as much as I put into it. Mm-hmm. And I've always been in that kind of mentality where you're only going to get as much out as you put in. And gymnastics very much taught me that. It taught me resilience and consistency and the amount of effort it takes to really see your dreams come to reality.
Yeah.
And I was a higher level gymnast. I'd
rather have hard work than talent every day. I've coached baseball, and it's like you're not going to get out of it anything unless you are willing to work hard at it. So.
And the hardest part is you have those people that will think that because they're so talented that they don't have to work. But at a certain point, right, talent only takes you so far, and then the effort matched with the talent is what makes, the difference between the good and the best. So
indeed.
Yeah.
Well, we were talking beforehand that I can trace my career path to this and the love for radio. It sounds like you can tie back your career path to your love for gymnastics.
Correct.
And where that's brought you. So it's kind of interesting, the connections that we make in life and the route that it takes us. But interesting backstory. Now, we've talked, and one of the things that you're very proud of in the mortgage lending is that you are helping your clients move that process along, a process where people are often waiting, twiddling their thumbs, things get hung up, and there's always something next that needs to happen. You're very proud of the fact that you really help move that process along and handle a lot of the things that do sometimes hang up that process.
Correct. Yeah. I mean, this is all an education point, right? There are some people that have bought, dozens of houses, and they've gone through the process so many times that they understand it inside and out. But that's not the majority of people, especially people my age, millennials or Gen Zers or whatever, whatever they are, right? Everyone younger, especially, I feel like has gotten to this point where they just think that the idea of owning a home, buying and selling real estate is just kind of, it's for the older people, or it's for the rich
or
people.
Beyond our reach. Yeah. And I remember feeling like that when I was kind of in apartment life in my first house. I could never have imagined it. And then you make that leap and it's uncomfortable. But then you figure out you can do it.
You rip off the Band-Aid, man.
Yeah.
And so part of that for me, I think the most important aspect of it is really just teaching them the steps that they're going to inevitably encounter by going through the process, right? So it's funny how many college students have excellent credit and they just don't even know it. They've never gone on Credit Karma. They've never downloaded the Experian app and used their free mode. Like they just aren't aware of the capacity that they have.
That might be a good thing. It might be a good thing.
Yeah,
until you go to buy a house and then you need good credit.
Exactly. You don't want them out there like signing up for every single credit card that every store throws at them. No, I'm at Best Buy. Get the Best Buy card.
Which is why I know that.
I'm at Sears. Yep. I got a letter in the mail saying I could get 0 APR on this American Express, and then it's $700 a year after that.
Yep.
So like the fact that they're so hesitant to utilize their credit, like you said, to their point, is actually almost a positive, because it deters them from making those negative situations a reality for them up front. And being up front, like I was one of those kids, I was like, oh, I can apply for this, I'm gonna do it. Oh, I got accepted for this credit card, I'm gonna apply for it. Oh,
they don't make it hard.
They do not.
For a reason.
Yeah. Like right now, I'm actually financing a brand new setup. I custom built a PC and bought some custom monitors for it. And I mean, all in all, it was like a $6,000 expense, and I'm still paying on it. And like, don't get me wrong, I don't regret doing it. I use it for work. I use it for gaming at home. And, I set it up with all the nice accent lights, and it's in my office next to all of my pops and stuff that are, $11 a pop. And I probably have like 200 of them at this point. So that cost me a pretty penny. But like, there's this fine line between spending money on things you want and spending money on things you need, right? And spending money that's accessible to you immediately versus spending money that's going to cost you more money in the long run.
Yep.
So being able to balance that is part of life that they just don't teach you in school.
So kind of putting on the financial advisor hat in myself here, is that borrowing money to buy a house, excellent reason to borrow money, because over the course of that loan, the house is going to appreciate in value, probably to more than account for the interest that you paid on the loan anyway.
Correct.
Versus buying an asset or an item that really doesn't have any value immediately, or depreciates in value
like
over
a $6,000 computer,
or an automobile, right? Or just day-to-day expenses, right? The meal that we eat for lunch, the clothes that we wear, putting that on credit card and letting it carry over month to month is a completely different kind of category of debt than a mortgage.
Correct.
Right. And they talk about good debt and bad debt. I think that's kind of the differentiating line there. But you're helping people to better understand that they have access to that good debt, and then utilizing it in the right ways
to leverage their debt. Correct. And that's another big topic that I try to discuss with people, is being able to not only be able to get into this house, to have a place where you're living, where you're paying yourself that rent versus paying some no-name entity that, you know, is reaping $24,000 a year off of you, where you're absolutely getting no return on it. It's like, that's $24,000, right? I was actually just having this conversation with a friend of mine a couple of weeks ago, because he actually lives with his roommate. And they split, like, it's a $1,300 apartment somewhere in Clayton. And, you know, they split the cost 50-50. And I was like, that's excellent. Like, you know, you're spending $650 a month on rent when most people are spending over $1,000 a month in rent. And I explained to him, because he had just moved out of his mom's house and he was kind of upset that he was having to spend this. But I was like, look at it this way. Like, you were saving $1,000 a month living with your mom, right? Now you're saving $350 a month, because reasonably he would get his check. He would take, you know, all of it, that $1,000, and he would put it into a savings account. And then he had the rest of it budgeted out, where he was only spending about $800 a month on his necessities. That didn't change, except for that extra $650 a month in rent that he was spending. Mm-hmm. So reasonably, he was making about $2,000 a week, and he was taking $1,000 of it, putting in a savings account, taking $850 and then putting it into like his actual expenses. And then $150 was just kind of like, oh, I want to go to the movie, or, oh, I want to eat Chick-fil-A today, or whatever that looked like. And I was like, that's great. So now what I want you to do is I want you to have that same mentality, take the $650, put it toward your rent, take that $350 that you're still saving, put it in your savings account, take that other $50 or $850 that you are already spending on your expenses, spend it, take the $150 that you were already spending, spend it, right? And in 6 months, that $1,000 a month for the last 2 years that you've been working is $24,000 plus $350 for the next 7 months that you have this lease. Is 7 times 3 is 21. So right around $2,500. So you're at $26,000
$450
in your savings, right?
24,500.
Yep.
Yeah.
So take that money and then use it as a deposit. Go FHA, get a 3.5% down on a $300,000 house. That's $12,000 plus closing costs. Don't even pay the closing costs. Roll them into your loan, so you're out of pocket the very bare minimum, right? And buy a house.
Yeah.
Right.
So I mean, that's a couple of things you said there, a little bit of creative twists on things that people may not even know exist, or that they're able to do it.
Yeah.
Those are some of the strategies that you can help people work through or find.
Correct.
And identify that make that home buying dream more accessible.
That's my job. I want to educate before I sell, right? Because at the end of the day, like, my job isn't to sell you a house. It's to make sure that you're comfortable owning what you're putting in, right? Because, you know, anyone can go out there and get qualified, right? There's lenders that'll do loans for as low as a 560 FICO score, right? But like, at the end of the day, those terms aren't the ones you want. I'd rather you say that, oh, I have, you know, a 580 credit score, and right now I have, you know, $8,000 that's popping up in debt, and I have $12,000 in savings, but like, I don't know, you know, should I take that $12,000 and buy a house? And it's like, well, no. What I would suggest is I want you to take that $12,000 and look at the $8,000 you have in debt, and I want you to cut that number in half. If you have 8 different things on your credit report right now, and each one of those is $1,000, and they all started at $1,000, and you haven't bothered to make any of those payments, pay them all down to 50% and see how much it greatly impacts your credit score.
And with the better credit score, you can get better terms.
Correct.
When you do go by that.
Because then you're not spending, like, and then save for another 6 months. Make sure you keep those debts where they are, right? Make the minimum payments on them. But at the end of the day, now they're below that 50% mark because you've been making payments on them for the last 6 months, plus that one lump sum payment. But now you're starting with, you know, a 640 credit score, which puts you in something like a USDA territory where they have 0 down financing options. Or like better conventional terms, where the bare minimum for most conventional loans is 620, and you don't actually start seeing the benefit of having a better credit score until you're at that 640 mark, right?
Okay. So are you working a lot with first-time buyers that this may be the first time that they're hearing some of this terminology, or knowing some of the different types of loans that are out there and exist?
I am, yep. And it's so funny because up until the point where I actually started working in mortgage, I didn't know a lot of this stuff existed, right? And I think that's just kind of the case with a lot of people is, again, this isn't stuff that's taught in school. As much as I really wish it was, as much as it reasonably should, right? Like, I didn't actually get a understanding of what a mortgage looked like until my second year of college, when I was in a personal finance class, and they were discussing a mortgage, right? They didn't explain like USDA, FHA, conventional, VA, all these different A loans. And, they didn't explain that there's different options. You could go 30 year, 15 year, 10 year. They didn't explain that like you needed a certain credit score. It was just kind of like this understood assumption in the back of mine. And I imagine a lot of people out there's head that you needed, a 700 credit score, and you needed 20% down of the cost of the house, and houses are only going up and they're only getting more expensive.
Now that's generally true.
Yes.
There's some benefit for those other things. That 20% down is fantastic. 720 credit score is fantastic, but it's not a requirement.
Yeah.
Okay.
And that's the big part that I've been trying to impart on people is there's several ways to skin a cat, right? There's a lot of ways that you can get to that end goal. And one thing I always suggest is put that 3.5% down now, right? Get you a $300,000 house today, right? Buy that, live in it for the next 2 years. Tell me how much it's worth in those 2 years, right? Because that $300,000 house today is, I guarantee, going to be worth at least 350, if not 400 in those 2 years.
And what a lot of people don't know until they experience it is that the roof over your head primary residence is one of the best wealth building, most tax efficient tools that is available, because you can make a really large chunk of profit and not pay tax on it.
Correct.
There's some restrictions there.
Some restrictions may apply.
But there's a limit to it. You've got to stay in it for a 2 year period at least to get that. But it's a great wealth building tool.
What is that called?
So it's the home appreciation deduction or exemption, rather.
Exemption.
Yeah.
Okay.
$250,000 per individual, $500,000 for a married couple.
There's another name that's escaping me. It's like if you sell the house within 2 years of buying it, you have to pay a certain amount of taxes.
Capital gains tax.
Capital gains tax. That's what it's called.
But you can avoid it if you
by living in it for 2 years, right?
Yeah. So great wealth building tool, in addition to the fact that the value is probably going to appreciate.
Correct.
So let me ask you about this change in the interest rate environment.
Go for it. Yeah.
How has it affected you?
Reasonably, things have slowed down, right? And people hear higher rates. And again, I think COVID had a lot to do with this, right? Because COVID came in, like they completely zeroed out the Fed balance, and they were like, for the next year or foreseeable time, we're not charging any interest on the Fed rate.
Yep.
Right. They froze student loans, they made interest rates drop through the floor, right? And reasonably, I don't think in the last 40 years, we've seen interest rates as low as they were in 2020 and 2021.
We haven't.
Except for maybe the housing boom. And even then, it was only like 4.5%, 5%, which was historically low at that time.
Yeah.
Right. And so people were seeing those interest rates and they were like, buy. And then obviously, collapse. Right. But the same thing is kind of happening now where people saw that 2% interest rate. We got someone a 1.75% interest rate on a 15-year fix. Wow. They pulled out $40,000 in cash. They lowered their monthly payment, even dropping down from a 30-year to a 15-year, and they lowered their interest rate. So like what I like to call the quadfecta, right? They lowered their interest rate, they got cash back, they lowered their monthly payment. Oh, and the other thing was they paid off their car. They rolled in their car loan into that and still was able to pull out another 40 while lowering their payment.
Wow.
So like, these things are an anomaly, but they do happen, right?
Probably at those zero interest rates that we were seeing, which equated to very low interest rates. The Fed was zero.
Yes.
Individuals still have to pay something, but very low.
Correct.
Not sustainable for a long period of time economically. But man, did we get used to it, really?
We did, right? And people sucked that in. And then once they did, they thought that was the new norm.
Yeah.
Right. And so now, like even, last year when we were selling 5% interest rates, people were like, oh, well, that seems really high. And I'm like, well,
historically, though, it's not.
Historically, like 7%, I think it's 7.25% historically has been the average over the last 50 years.
Yeah.
Right.
I remember as a child, my parents talking about double digits, mid-teens as their interest rate on their mortgage.
Yeah.
Right. So
my mom told me the first house she ever bought had an interest rate of like 11.5%.
Yep.
So yeah, like it historically, we haven't seen a high interest rate. Right.
And even back then, it was not a bad time to buy a house.
No, it wasn't, because, that 11% interest rate was on $40,000 home, which now, adjusted for inflation is probably about a $500,000 home.
Yep.
So like reasonably, the money has gotten more expensive, and that's really what it comes down to. And so like people are looking now at buying a house that, back in the day, they could have bought for 120, 130, and that was 10, 15 years ago. And now that house is sitting on the market for 450, 500, upwards to $600. And it's like, how long are you going to wait? Right. Mm-hmm. Like how long, because you might wait for that $500,000 house that you're right now currently available to buy because you have the means to do so. And the only reason you're waiting is because you think that interest rates will drop. But in the 6 months that you're waiting, because you're waiting for that 7.5% interest rate to go down to a 7% interest rate, mm-hmm. that house has now gone up $50,000 in equity, and you just waited yourself out of the option to buy that house because now you can't afford it anymore.
Yeah.
So that's my fear for a lot of people, is that they're going to spend so much time sitting on the sidelines waiting for something to happen that they're going to price themselves out of what they actually want.
Yeah. Definitely. No, I mean, we've seen small periods of time where the housing market has not appreciated, but they are few and far between, and you zoom out far enough and it's a curve straight up. There's a lot of documentation that's mm-hmm. needed when going through the mortgage process. And a lot of times that is
also a deterrent.
Or oh yeah, we need this, and oh yeah, by the way, we need that, and hold on, things got held up because we didn't have this. Do you help your clients kind of get all of that together and get prepared for that process?
Yeah. So we actually work with a pretty intuitive system. It's called Flowify. So and that's essentially our POS, right? So that's the point of sale for the customer. That's client facing. What they do is they go to our website, they click that apply now button, and it redirects them to our Flowify portal. It prompts them to make a username and a password, which is accessible to them at any point. Once they've logged in and they actually start the application process, we get an email saying, hey, you have a new borrower that's started an application. If they get halfway through that application and then get distracted by the butterflies or the dog chewing up the carpet or the kid spilling milk on the couch, whatever that may look like, mm-hmm. it sends us a notification about 15 minutes after they close the tab that they didn't finish. Likewise, if they do finish the application, it sends us a notification saying, hey, you have a client that's completed. So within that completion process, like 3 major things happen. One, we get permission to do digital business, right? Because now in this day and age, a lot of the stuff that we're looking for, then we send to us via email or in this case, uploaded to this portal. So we want to make sure that people are okay with doing online business.
Which, by the way, I always like the portal option, security, don't attach things with personal information to emails.
Perfect.
Portal works well.
The portal is the best option. And I always try to steer people that way. It's like, even if you're taking a picture on your phone and then taking that picture and uploading it to the portal, don't email it to me. Like I would rather come to your house and personally take pictures on my phone and then upload them to your portal, then you get confused and just try to email me stuff. 2, we ask for permission to pull credit because buying a house requires a hard pull.
Need it.
So it is kind of a requirement. And then 3, the major thing is making sure that the documents, like as you're going through the portal, it creates basically a funnel. And that funnel kind of weeds out the unnecessary questions. So like at the beginning, it's going to ask you like, are you looking to buy or refinance, right? And so if you click that buy option, obviously anything that pertains to a refinance, it's just going to go away, right? Next thing it asks, there's one question there that asks, are you prior military? If we click yes on that box, then it automatically prompts you to say, when was your enlistment date? Are you still enlisted? Are you retired? All of the nuanced questions. But what that also does is it prompts you for documentation from the VA.
Loan.
Because you may be eligible for a VA loan. And so again, this system is extremely intuitive. And it even, there's certain points where it's like, where do you plan on buying? And if you have a specific address in mind, you can put that address in there and it cross-references that address with the USDA eligibility website. And if that house is in a USDA eligible area, it'll ask you if you understand what a USDA option is. And obviously most people say no. And so if you say no, it gives you a little drop down informational of what USDA is. And it asks you if this is something you'd be interested in, right? So if you click that yes box, then there's additional documents that are generated that are required through supporting documents that are asked for.
Which may help on down payment or loan rate financing terms, right?
Yep. So like one example with USDA is that USDA has two different types of income. They have the qualifying income, which specifically is generated towards the people that are applying for the loan. So mom and dad are applying for a loan, but they have a 17-year-old in the house, right? Typically, USDA is upwards of about 80% of the area median income. So in Raleigh, the current area median income just went up. It's 121 now. It was like 110 as of like 2-3 weeks ago.
We live in a great area.
We do.
Healthy incomes.
We very insulated, very big area. But yep, 121 is now the average median area in Raleigh and the surrounding areas. And 80% of that is what you can actually make in order to qualify for a USDA loan. So if you make more than that 80%, you already disqualify yourself.
Okay.
So that's qualifying income, but they also have what they call household income, which actually takes one step further. And so, like I said, that 17-year-old son, if he has a part-time job where he's making $20 an hour working for a mechanic shop, and he works 20 hours a week, making $400 a week minus taxes, right? That's $1,600 a month, which 10, that's 16. So that's like right around 20 grand a year. If your parents are making, right at 70, right? And then you add that 20, you're now at 90, and the average median income is 80% of that 121, which is right at like 85. You now also disqualify yourself from that USDA eligibility.
Okay.
So once, again, going back to the application, once you actually say, yes, I'm interested, they start asking you questions about your household income versus just your qualifying income.
Okay.
And they also, give you a little brief description of what the difference is. So you understand like, if little Jimmy has a job and little Jimmy's making good money, then we might not actually be eligible for this. So all that
choose your own adventure, leading you to the
final
right path of where you should be.
Yep. And once you're done with the loan application, it auto populates a field where then you can actually be prompted to upload all of the documents that are asked. So typically 9 times out of 10, and this is probably 10 times out of 10, we'll need a driver's license. We'll need at least 1 year of tax returns, 1 year of W-2s, 1 month of pay stubs. So if you're getting paid weekly, we need 4 or 5 pay stubs. If you're getting paid bi-weekly, we need 2, or even monthly, we just need the 1. And then we need, and then 2 months of bank statements from the account that would be holding the funds reserved for closing. So, some people hold that money into a retirement account. And so for a retirement, for example, we just need that retirement account to show that it has more than 20% of the funds for closing. So if you have $100,000 that you're planning on putting down, you need to have at least $125,000 in that account.
Now, I've heard a couple things. During the midst of that process, don't go out and make any major purchases. Don't surprise your mortgage loan officer with buying a new car or the fact that, that's in the bank statement, but I was going to pay those costs with some cash that I had from somewhere. They generally don't like that, right?
Mattress money is a no-no, right? So if you're pulling out 10 grand out from underneath your bed, that's a no-no. That money needs to be sourced. So you can take that money out 2 months before you apply for a loan, and you can put it in your bank account and literally just let it sit there. I actually have a borrower just recently that I closed on. She had sold her house. She had like about 50 grand in cash in her house. Right. And she took that 50 grand. She opened a brand new Chase account, put the 50 grand in there. And then also that was where all of the proceeds from the sale of her house in New York went into. So she had this one lump sum 50 grand deposit. That was all just mattress money. And then she had the, $700,000 from the residual proceeds from the sale of her house.
Nice down payment.
Oh, yeah. And the funny thing is she wanted to buy a house outright. She did not want a mortgage. But she also she really liked the house that she was looking at here. It was like right around 430. And she wanted to make sure that she had like a big cushion because a lot of it was meant for retirement. Right. And so she wanted to leave a majority of it there. And I was like, well, then why don't you just get $100,000 loan, right? Put $330,000 down. You have the assets available for it. Right. And just be done with it. Right. And so reasonably, all we had to do was we had to season the proceeds. But because that 50 grand had been sitting there for like 3 months, we didn't even need to ask questions.
Not a problem.
Yep. underwriter saw it, and they kind of like at first questioned it. They gave me a call, and they're like, so we do see that there's this one lump sum of cash, and it was just money that she had been saving in her house over the last 25 years. And she was like, I don't trust banks, but I need to trust a bank now to buy a house.
Yep.
And so she was like, well, if I'm going to be moving, then I need to put this somewhere safe.
Yep.
And so she opened that account. She put it in there. It's seasoned for 3 months. But after that 3 months, because it had already been sitting there, they didn't require any additional documentation.
You've not been in this field forever, but it sounds like you've seen a few things.
I have. Yeah. My boss has done over 200 loans since I came on. And with each one, you kind of pick up a little bit more. So I enjoy what you do? On the wall. Heck yeah, I do. Yeah. I love what I do. I love educating people. I love that fulfilling feeling I get when I'm sitting at that closing table with a client that didn't think they would ever get to this point. My number one realtor partner just closed on her and her husband's house last month. And like, she's not making very good money, but he's a retired New York Police Department or police officer. His mother is actually the one that I was just talking about. So I did a loan for his mother, and then I did a loan for her, and then I did a loan for my realtor partner's best friend. But I was just at his house helping him set up his direct deposit, and he came out on the porch and he started tearing up, and he's like, Kodaah, I just want you to know, I'm 57 years old, and this is something I never imagined I'd be able to do. So, living in New York, being an ethnic person living in New York,
which is expensive, and yeah.
He's like, I didn't think that this is something that I would ever be able to do. Yep. But you helped me get here, and awesome. I can't thank you enough.
And the chain of connections there, referrals speak volumes about the value that people perceive you provide to them if they're willing to recommend and introduce you to others that need the same service. So, correct. Yeah, good job. Man, it's been a pleasure. And good to have you on. Kodaah Hansen, Lighthouse Lending, and can you still do a backflip?
I can.
All right, I won't make you do it right here.
Okay, I was going to say, I don't have
no room here. That's awesome.
Yes.
We'll have to see it sometime.
Heck yeah.
All right, hey, appreciate it.
Yeah, thanks for having me.
How can people get in touch if they need to or are exploring home ownership?
If they need to get in touch with me, it's simple, lighthouselending.com. That's our website. It's our name. Personally, my phone number, 919-335-2422. You can find me on Facebook, Instagram, basically any means of social media. We have TikTok, but we never really use it, but we're on there. I'm in Fuquay. I'm local Holly Springs. We're just here for the Triangle. We're here for North Carolina. So we also serve South Carolina. Okay. So anywhere in the Carolinas, we're more than happy to help.
We'll try to get this out there on TikTok. So please, use that. Yeah. All right. Thanks for being here.
Thanks, Peter.
Take care.